if you get, some of these temporary factors coming back out, prices won't go down as fast as they go up.
Yeah, that's the whole issue. How does higher interest rates solve any of these embedded inflation problems?
It doesn't. It just curbs demand. Good morning. Yeah.
Yeah. Good morning. So, are you gonna go on a diet because rates are higher? I know you're in pretty good shape, Stel, but are you gonna drink less alcohol because the Fed's gonna tighten 4 times this year?
My kids don't need. They don't need to eat 3 times a day. They'll eat just once. I was going to add actually the way energy prices are going up, and it takes energy to produce anything. Even services or not just goods. That's gonna pass through. And yes, a big chunk of UK inflation surprise was from used cars. And for people who don't know, the problem is with semiconductors, and new cars are being produced at a much lower pace, and so used cars are getting bid up. Yes, that is a transitory effect of inflation, but like Ryan said, there's going to be second round effects, and you can bet that this is not over by any means. So the question is, what do central banks do?
Just a quick heads up, just to throw in a quick heads up for something for the future. Inflation is going to rocket in the UK in April because the energy price caps are all going to come off, and energy prices are going to rocket. You're going to be seeing that in April, a big lift in inflation.
So they're going to give people a reprieve during the winter when they're using it for heating. a little bit. It was a cap. They brought in a price cap while prices were low, to stop things supposedly like this, which works in quiet markets but doesn't work when you get markets blowing through the roof, which is why a huge chunk of energy companies went bust over here the last few months. Don't buy oil up here.
Even if you're a bull, if you can store it in your swimming pool or something, you might have a good
even if you're a bull, I wouldn't buy it here. Possible 3 drive. Look at this RSI pattern, guys, on WTI. So this is the first time the weekly has made a new high under 70. All these prior levels were over 70, and so it's been diverging a long time.
Glaring divergence, yes. Well spoken, actually.
So if you're bullish, I think you're going to have a chance to buy a break in energy here. So Stel, did we miss it? Silver's acting pretty good.
You know what? I've been asking, I asked in the chat room as well. I said, look, guys, silver was up 2% yesterday. It's up 1.5% today.
Out of nowhere, no news.
I haven't seen anything that's causing this. Okay, there's been for months and months, people have been saying, the COMEX eligible for delivery silver is being depleted, blah blah. But we've been hearing this for years. But at the end of the day, it is a finite amount, and it only takes one big delivery to really shake things up. I don't know if anything's happened, but it is decoupling from everything else. The good thing for bulls is that the gold is also trying to rally, but as long as we're below 1835 or something like that, we're still not breaking out. But silver is outperforming. I really don't know why. If anybody has an idea, they can tell us. But even when stocks were down this morning, indices were down 0.5%, silver was already up. So it's decoupled. But it is what it is. I really want to add to my longs, and I've said it so many times. I'm either going to add quite a bit lower, like 19.5s. I was looking at 21s, but it depends on if it gets there or how it gets there. But if I added the high 19s or 20s, if we ever get back there, or if I add above 26.5, it's going to be obviously different prices, but I'm going to be adding at some point.
Metals. Good morning.
Good morning, Steve. Hey, Steve.
Metals. Good morning, Ryan, and everyone else who's here. Metals tell you are now going to crash that Fed is increasing or is about to increase rates, because every single person that wanted to preserve their purchasing power and bought like gold and silver with real rates being at -7%. Once they see real rates being at -6%, they're going to immediately get rid of them, because I mean, you don't want to lose 7% on your money, but 6% is perfectly fine, right?
Yeah. Yeah. Anyway, so the gold silver ratio is falling.
Yeah.
It's gone back to 76 and a bit.
There it is.
Yeah, there you go. And that's something I'm looking at. But really, we need to see, for bulls, we need to see gold break above 1835. If it's below, for me, even though I want these to go a lot higher, I'm not convinced yet. Our friend Josh, he says, it's
decoupled.
It's decoupled, and you might miss it if it's.
Wouldn't be the first time for me.
No, but you can always, these things, when they go, they're gonna go. So silver, if it breaks 26.5, and especially if it breaks 30, you see 40 very quickly. So it's you can miss a part of the trade. It doesn't, it's nobody's perfect. Nobody catches the lows and the highs, but I'm still waiting to see more price action on that.
Actually, I was, when gold was down and silver up, and I was looking to see if there was any differentiation between the silver miners and the gold miners, and there wasn't much. Here's AG, if I was long AG because I like silver, I would not have been happy with that, or the junior basket. And actually, they all kind of look alike, don't they? I mean,
they do.
GDX doesn't look that great to me.
Yeah.
Here.
Yeah, I'm long those, actually, a little bit out of the money, but the thing that strikes me is that cash flow wise, in terms of free cash flow, miners have never been better. Or
they're printing money.
Yeah, they're the best. So imagine what happens when the price of their product goes up. I mean, they have so much catching up to do. But like you said, they're underperforming. So you have to be patient.
It should be the other way around. I think. I was always taught, I don't know, we could ask Steve about that, Ryan, that shares usually lead the underlying commodity, but they didn't in oil this year, so
that's true.
It's a new phenomenon.
Miners are extremely underpriced, and people fail to understand many times that the biggest value for miners is what they haven't extracted.
What's in the ground, exactly.
What's in the ground.
Yeah.
That's a great point.
Yeah. So you understand that there is an immediate, profound impact when price of these metals goes up in the actual valuation, right?
Yeah. So even with this big rally, in silver, I'm looking at the miners, kind of an inside month. I'm not convinced. So,
no, I'm not either yet.
Yeah. Because I mean, I could buy silver on leverage, and but how much physical do I need? What am I going to do? Build a weight set out of silver bars and bench 315, 5,000. How many ounces did you bench today?
That doesn't sound like a bad idea to me. If you ask me.
Yeah. All jokes aside, I had
silver coin bag you could do curls with. Silver coin bags you could do curls with. Yeah.
I had a friend in London who we worked together. He was Indian, and he was actually one of his walls in his house. He was like putting gold bars in it. So
okay, yeah,
okay,
yeah, that was interesting.
What's his address?
Where's he live? Yeah, where's he live?
Give the details.
We're getting a crew together. Ocean's 5.
But seriously, he was doing that back in 2005, 2006. So he's done well, I think.
Yeah, he's done very well. So, what do you think? Time for a little bounce in S&Ps?
This guy must have a very, very expensive earthquake insurance policy.
Yeah. Anyway, guys, what do you think here about indexes? This was a trend line everyone was watching, with all those hits there, right? And, we took out this low, holding this, but, if you didn't have a bias, and we all do when it comes to stocks, would you sell this?
On the NAS?
Cover up the title. What would you do with a chart like this? I'd be pretty cautious about being bearish, wouldn't you?
Yeah. Yeah, unless you got a test of that 156.
Yeah, I'd be cautious. So everyone's pretty beared up, and I don't know what's going to drive it.
Technically, the S&P's done the job. It broke the level, it's held the level. When we all look at the charts, we all look at the text. If you want a textbook technical move, it's breaking the level and then holding the level the next move after, and that's exactly what the S&P's done. So there's your lean point. Yields coming off a little bit here.
The question is, why are markets trying to sell off? Because yields are going higher. What do we know? We know the Fed has told us all these things they're going to do, and the market's actually pricing a little bit of a chance of a 50 hike in March. So I think the market is a little bit ahead of itself. Yes, the Fed wants to get stuff done, and they want to hike, and they want to tighten, but I don't think they want to surprise the market, let's say. So of course I could be wrong, but I don't.
Yeah,
I don't
they never wanted to surprise the market, to be honest.
Yeah. I don't see why they just can't do 25, 25, 25, and then why they have to go and do a 50 and shock the market in this way. So I think the market, it's getting a little bit ahead of itself, and we're seeing yields pull back a little bit, but they're still on the rise. And as I said before, I think 2% is a big psychological level. If we get there, then we have to reconsider.
I think a 50 hike would panic the market a bit.
It would, yes.
Why are they hiking so hard? What do they? They're getting out of their balance sheet as fast as they can. They're getting out of QE as fast as they can. They're hiking as fast as they can. What do they know? We don't.
Call me old school, but I think that if the market hasn't panicked by the fact that the reported inflation is 7% and we're still doing quantitative easing, and we are at 0%, I'm not sure the market can panic easily. I mean, theoretically speaking, and if we spoke about the era that actually markets made sense in how they reacted to economic data, I mean, there wouldn't be anything more scary than what's actually happening.
Yeah.
Kman, you around?
I'm extremely around.
Hey, buddy. How are you?
Extremely around. Like when they ask me what size are you in, trousers, I'm extra medium.
What are you thinking in here, Kman?
Quickly on that silver, as Stelios was saying, nobody knows what's going on. I've been trying to look for news or updates or comments even, and there's very little apart from the 23.45.50 small tech break. There's a bit of traffic going on around the 24.5 area, in my opinion. Not sure if it's like one-off flows or one-off payments, as Stelios was saying, and it might be we might be close to an end of this round at least. That's my opinion. I'm still long as well, but I'm very patient as well, and I do trade around like small clips here and there, and this area is quite attractive to me to trade around just like a small clip of it.
You mean take a piece off up here?
Yeah, take a piece off, and then as Stelios was also saying, it's a case of having the long-term move right, and then if it comes back down, if I take a clip off here, comes back down below 23, reload it, and then wait for the bigger stuff to really come our way.
Okay. And yen, and any thoughts day after the BOJ with the way yen's acting?
Not really. We are still in the 114s. To me, the bigger levels will still be mid to low 113s and the 115.5. So here we are, like in the middle of the range. I would love to buy a lot and say it's going higher, but the price action is telling us that we have to be a bit careful, and that's probably led by the stocks coming off and a bit less positive risk. But then if you look at yields, real yields, and Oil, for instance, energy still paid. Dollar yen should be underpinned somewhere between here and 113.5, let's say.
Marijuana stocks are cheap.
Are you treating us, Dale?
Did you read there was this research piece saying that cannabis actually can protect against COVID or some kind of the sort. So yeah, let's with that excuse.
There we go.
There's the excuse. Let's go buy some.
Yeah, Dale's been on 10 joints a day.
Well, look at where Tilray was.
Yeah. All these stocks have been killed. There's an ETF for that actually for cannabis stocks called MSOS. And that's been pounded as well.
I pulled it up when I was on the bong. That MOS.
There you go.
All right. Yeah, this is what's so. Look at that.
Before the Canadian CPI is coming in, we are on a dollar Canada trend line, and the Canadian dollar has been doing very well in the past few sessions, whether it be versus dollar, but especially on the crosser side as well. Euro CAD is trading quite low. It's underpinned by oil, but also thanks to the better data. So a bit of watching out of what's going to happen with the Canadian dollar this afternoon as CPI is coming out in less than 10 minutes.
Thanks for the heads up.
Yeah,
it's a good thing to know what's going on here in Canada. So
and also not to forget that the Canadian yields are absolutely flying, and I think they're starting to overdo it a little bit as well, but you can't, if you can't beat them, join them.
Okay, so who else is with us? We have the whole crew here.
How many people do you need?
A stadium.
Maybe we can touch on cryptos as well.
Okay, yeah.
Nothing has changed really. Bitcoin about 42K, so really we're holding above 40K, which is
you're waiting
the big. Yeah,
you're waiting for closes under 40.
Yeah, if we get a close under 40, I think I'm going to take a short. I haven't really traded cryptos at all, but no, you can. They're now they're futures, right? So you can do that. But man, cryptos, I'm going to size accordingly, as in a fifth of my usual size, and if that. But they're holding, and they're still relatively correlated with risk, even though equities are higher now. They're down small, but big support, which is still holding. And if I know it might go. If 40K goes, then we're going to head towards 30 to 32, which is Michael Saylor's average. Everybody knows that. It's such a dangerous thing when the market knows what you're holding at what level. I remember when I was market making in London, certain positions, if the market got a whiff of somebody having a big position, they would just force it as much as they can, just push it against you.
It was a sport, wasn't it? Like deer hunting.
It was a sport, yeah, exactly.
Fox hunting.
Especially with stuff that wasn't that was traded over the counter, which was a bit more complex. It would just you just get slaughtered if people knew what you hold and where your pain threshold is. But anyway, we know where his is.
It's a different world. I remember guys would put on positions above the floor upstairs in their offices, and then they come downstairs and they might be covering, and people thought they were initiating. So that privacy part of it, especially if you had a rep before you went into the pit, people used it to their advantage. If they were being obvious about something, it wasn't, initiating positions. They were covering, and a lot of people thought they were initiating. So, there's a lot of that that used to go on. I don't understand why people want to publicize their positions. Musk and everything. It's kind of new way, new age.
You think they should, or they should not publish the positions?
Based upon what the SEC says in filings, yes, but to use social media to let people know what they're doing, I don't know. Can you really believe they're doing what they're doing?
Oh no.
anyway,
doing the
if they're
opposite.
publicizing. It's like if China says they're selling something, they're saying that because they want to buy it, and if they're buying something, they have something to unload. I got used to that.
Like Goldman Sachs and its clients.
Yeah.
Then Citi, if Citi
Like
say
the Duke
they're buying
brothers.
euro, you sell it.
Kevin said, like the Duke brothers, reopen the market. Remember that scene? They were having a heart attack and
turn those machines back on. That's what they were saying.
That's right. So we have a pretty quiet session. We want to remind everybody that we still have the special pricing happening here for what, another week, Steve? Or a few days ending this weekend?
Yep.
Okay.
And this is the opportunity for people to take it because next offer might be September.
Okay.
Yes.
All right. Okay. So, take advantage of that. Maybe one of you guys could post a link in here.
I'm going to do that.
People could go ahead and do it and, make 2022 a year you're part of something bigger than yourself, be in the community, develop relationships with good traders and hone your skills. They say iron sharpens iron. So, it's always great to have sounding boards and have ideas from other people. You don't automatically take them, but they may draw your attention to a trade you weren't even thinking of. So you only have two eyeballs. And, this community, these are traders that, it's not, for a lot of them, it's not a side gig. It's how they support themselves and their families. So if people make 22 work for you in 2022, we're all going to know what to do. So how about that for our motto going forward? Even if I miss silver, I'll still know what to do. So we'll see. It doesn't bother me as much anymore if I miss something because there's always something else out there. And, here's something recently I missed and I was waiting for it for a long time. And I'm glad we have Angie here. It's the grains. So I don't care what the Fed does. You look at soybeans, and this was a level I was looking for after, this first big run that we had up here. I said, you got to buy a pullback to 12. So, I don't think it matters what central bank policy is when it comes to some of the ags. So, we're not getting a lot of rain. We're still in a La Nina year. China doesn't want to sell fertilizer to the U.S. They're stockpiling grains. They all look good. Corn not as good, but the wheat looks great. It's an orderly uptrend. And you can't eat gold, okay, or drink oil. So pay attention to what's happening. I remember Ben Maldonado talking about food security. And, there are pictures, I don't know what's like on the other side of the ocean here, but there are a lot of grocery stores that, supply chain issues and not having the goods. But, these are very high prices for beans. Used to be a war cry for 20 years, beans in the teens. Now they barely leave the teens. So, they'll need a new war cry at the Board of Trade. Oh yeah, I forgot, it's a bowling alley now. So something to keep an eye.
10 seconds.
Okay.
No, don't worry.
You want to put up? Okay, go ahead.
So we got building permits, housing starts, but really Canadian CPI is the important one. And let's go. US data better than expected. 1.87 versus 1.7. Yeah. CPI year on year 4.8. So in line. Okay. Damn. Yeah, that didn't give us anything.
Dollar a week. You wanted gold to get through 1830 still? Looks like it's
1835. I think I need to check the chart again, but somewhere around there. Let's have a look. Yeah, those highs. 1835 is probably the high that we need to break. But
okay,
some of those
on fire.
Some of those Canadian numbers are a bit higher on the. They have. Canada has 18 goes at guessing inflation. So on like the trims and means and commons, they're all higher.
Well, core CPI is better than expected. Yeah.
Well, thank you, team.
Thank you, Dale.
Great. It's great batting the ball around with you guys, and Steve, try and get some more people to, help me fill up airtime.
Thank you, guys. Have a nice.
Because I'm pretty shy. I get scared talking in front of a lot of people. So
you better get back on those COVID meds. Light up another stogie.
Yeah, the new way to beat COVID. So we have Angie Setzer here, the goddess of grains, and
nice.
I'm going to bring her in. And Angie, welcome back to F.A.C.E. How are you?
Thanks for having me. Good. It feels like I was just on like last week, but it was early October, I think. So
I know.
Time flies.
I know the way I schedule things, I stay ahead of the curve. Some people have said to me, well, Dale, I don't know if I'll be alive by then, but if I am, I'd be happy to be on with you. So I don't know if you have anything to share, Angie. If you don't, I want to talk about these grains here. And,
I didn't bring anything, so feel free to pull up which charts if you guys want to start talking about soybeans. We can, or I'm pretty flexible. Lots to chat about for sure.
Okay, so we had this nice pullback in the grains, and it was pretty close to almost like a harvest low, wasn't it?
Yeah. It would have been right
across
in that time period, pretty much right on track seasonally to see that low kind of come into play. As harvest gets started and the farmers start hedging and things of that nature. And then we build that South American risk premium back in as we head into January. And so you could almost say it's been a picture perfect seasonal style trend here in the bean market, at least over the last 3 months.
Yeah, maybe there'll be, can you think of anything that could generate a pullback? We've had $2 pop, maybe we get a pullback in grains to 13. 1280. What do you think could drive that? Good growing conditions.
Yeah, I think one of the bigger things that we're running into right now is we've seen some pretty substantially dry conditions in portions of southern Brazil, and there's a big concern over Argentina. And one of the things that we tend to run into when it comes to guessing what Brazilian production will be is we tend to forget that Brazil is more of an up and down growing area, to put it completely and entirely simplistically, versus a horizontal one in the US. So in Brazil, you have this really widespread start planting in September in the northern portion of the country and kind of work your way down to where Argentina is just really kind of finishing their planting and really looking ahead. January, February rainfall will really be important there. But we have seen some pretty substantial production losses in Paraná, Rio Grande do Sul, Santa Catarina, Uruguay, Paraguay. The question is how much, and so I think in this market anymore, we're so well connected. I mean, any market, we're so well connected that we have this ability to really kind of blow up or make it feel as though maybe, something is taking place that is much larger than what it may actually be. For me, though, we have seen this reduction in production. We're no longer talking a 150 million metric ton crop out of Brazil. It's probably going to be closer to 138 or so. So we did take 400 million to 500 million bushel off from what we were looking at. In my opinion, we basically went from something that was extremely bearish to now we're in more of a neutral situation where we're waiting to see what happens with China, their COVID zero policy, and their demand, here in the months ahead. And that's what's going to have a bigger influence on this market as a whole, I think, than anything else.
Yeah, I was going to get to China. They have huge stockpiles. Someone said that they might be stockpiling grains because of the water content in grains. Could it be part of they have water problems?
No, I mean, it would be hard if you would think about it from the standpoint of like a dry, like you want to store, grains can store well because they're cool and dry. And so you're looking at a good storage moisture level for corn is around 15% moisture. And so, there's some water in there, but I would say you'd probably be further ahead to come up with some other way than trying to sap the water out of corn. There isn't much there. Soybeans store best at like 12 to 13%, and the same could be said for wheat. So we really take most of the moisture out of these crops in order to store them. Now, could you try to find a way to kind of evaporate that moisture out during harvest time? Potentially, but I think there's some other ways to look at water availability versus the grain side of things.
And how has COVID affected farming in the U.S., Angie? Has it been business as usual? It hasn't, has it?
I mean, it has been, but it hasn't been, right? Like we're going to continue on. The customers that I work with, the farmers that I work with, and the folks that I work with, across the country and around the world, we have small windows of opportunity to plant the crop and to grow the crop and to harvest the crop. And so, we're going to continue to take advantage of that in every way that we can, and going to continue to kind of power through. One of the problems that we tend to run into in grain or with COVID right now is been the biggest thing has been the supply chain issues, not being able to get some of the things that we would like to see, whether it's parts, equipment, seed, chemicals, fertilizer, all of these things have really been a struggle, working with trying to pin down what our, cost of production is and things of that nature has been exceptionally hard too. And then, of course, the supply chain issues down the road. So for livestock farmers, the ability to harvest cattle, hogs, poultry, whatever it may be, obviously the meat packers and the packing plants have had some struggles with staying open, and things of that nature. So, I mean, we've gotten used to, I think, like most anyone else in society, right? We've gotten used to having some of these struggles that we've grown accustomed to over the almost 2 years now, though it's still exceptionally frustrating as to what is taking place.
Okay, Angie. So I'm looking at your new website. Nice. And, besides COVID and, people trying to conduct business as usual, what should we be looking for? We're entering, we're a couple of months away from spring. What do you think is going to be the major event for spring planting? Think we'll get a good crop in the ground this spring?
We hope so. Weather will always be the supreme determination, the determining factor of what we're going to do. You know what I mean? Weather. And so right now we still struggle with what weather is going to look like, in 2 days, let alone 2, 3, 4 months. And so, we are seeing that La Nina stay in place. That tends to create some decent growing conditions throughout the bulk of the U.S., though it does create some real concern over drought in the southern plains, as well as the issues that we're seeing in Argentina, southern Brazil, places like that. I think the biggest thing that we're going to be watching is the cost of fertilizers increased exponentially. I mean, you're talking 2, 3, 4, 500% increases versus a year ago.
And that's because of China not being willing to. Is that where we were importing?
It's a part of it. China, we didn't import a lot of phosphates. It was China reduced their phosphate exports, I believe it was, and they account for about a third of the world's supply in that, or exportable surplus. And so that did impact that, but that was just one type of fertilizer. Of course, the energy issues that we're seeing in Europe had caused a lot of European fertilizer producers to slow down on what they were putting out. We've seen some substantial increases in demand in other places, obviously. And so there's just been kind of the perfect storm in fertilizer as well. The issues that we're seeing with Russia, that's both influencing fertilizer and influencing grain prices. The tension that we're seeing between Russia and Ukraine. Ukraine
was kind of like the grain belt for Russia, wasn't it?
Ukraine is. I mean, Russia, it produces a pretty substantial crop on its own without Ukraine. It produces
wheat
around
mainly, right?
75 million metric ton of wheat a year or so. So just about 3 billion bushel, which is a pretty substantial crop. It exports a good portion of it. And Ukraine this year has really kind of stepped up and has been, China has been hungry. China has been buying in a boatload of global grains. We had a large position out of the US on early with China, but then since then they've been kind of working out of the Ukraine. Ukraine had a massive crop, a record corn crop last year, and close to a record wheat crop if it wasn't a record. And so if we were to see some sort of aggression there, I think that would impact, what we would see from a grain price standpoint, simply because it would take a large portion of global grain production that we've seen expand in the recent years,
Right.
and kind of put a big giant question mark on it. The last time Russia was aggressive towards Ukraine, we saw a 20% rally in wheat prices.
Well,
Now, granted,
okay.
we started at 550 or so versus starting at 750, but with the world as concerned as what it is about any sort of supply chain style hiccup, especially when it comes to food, this could be huge. And obviously, the fertilizer influence could be big in the US as well. And it's just the geopolitical ramifications, the butterfly effect of all of these little things that are taking place right now in eggs, will likely keep us supported for quite some time, even if we were to kind of take some of that inflation story away.
Okay. And so how does the Fed think they're going to calm food inflation, any kind of inflation that really isn't that, it's not interest rate sensitive. People they want demand destruction, so people have to be broke because they can't buy food that's not there anyway. So what can the Fed accomplish in the ag community? What are they thinking about a new regime by the Fed, and just that they're most likely their costs are going to go up because of higher interest rates, right?
Yeah, I mean, it is concerning. I would say we're at a precipice of something that could be, quite character defining, for lack of a better term, in agriculture for quite some time. Obviously we've seen it before. We've been here, done that. I've been doing this for 17 years and have traded the new paradigm in grains no less than 4 times. You know what I mean? So we tend to believe that, okay, well, this is the way it's always going to be. There's no way we can do away with inflation. I'm thinking back to 2008, and that conversation that we had seen, and you pull up a fertilizer chart from 2008, and it'll give you the chills if you're a input supplier. You know what I mean? We closed out the year at near record highs, and started the spring at pretty typical to even low levels. Just because of the fact that we had seen the housing crisis and the economic turmoil that had come from it. And so at this point, honestly, I would say that lumber, oil, cotton, you look at all of these commodities right now, for the most part, and I would think all of them are kind of telling the Fed that I don't care what you say. And it may not even be an action that fixes it. I mean, we're seeing all of these contracts see, speculative interest come back in. Buyers are coming back in, pushing it higher. We still see a lot of conversation of grains are poised to move higher, which they are. Obviously from a technical standpoint, we've broken through some pretty strong resistances as of late, and we'll likely try to push up to contract highs in corn, at least, I would say, with the strength in crude and the concerns over what's happening with Russia and Ukraine. So, I mean, at this point, I don't think jawboning or even a slight increase in rates is going to do much to fix, what we're looking at in this global grains problem. I think a lot of us are still struggling from a hangover of, we have way too much per the USDA going into the fall of 2021. I mean, in September of 2021, the USDA said we had more than double, what we would need on hand or would be left over for corn, and then suddenly started to really kind of hack that, down as time progressed. And so here we went from, way too much to not enough. And so we tend to very much swing on the pendulum, but as weather, the weather patterns get more erratic and the world tries to figure out what the future looks like, post COVID, it's going to be interesting to see. And I think we're all waiting to see what happens in China as they, try to proceed with the zero COVID policy in the face of something as contagious as what we've found Omicron to be.
Yes. So when you look at this, back to the COVID lows, you had almost a $10 move in beans, right? So you pull back 5 or, halfway, 61.8 here. And if we have a repetition of what happened here, you're talking beans over 20. And then if you add a fib extension to something like that, you could be talking upper 20s for soybeans in the coming years if we repeat this cycle. And this was just not the end of the wave, but just the, first move out of the hole. So
Yeah.
they all look pretty good here, Angie. And, I want to wish you luck. Nice work on your website. And I think we may as well, I think if you guys are interested in grains, that you need to go to countserie.com and get on Angie's list and keep tabs on fundamental developments, because the grain situation, the inflation part of food and food security, I don't think is going to go away for a while. So appreciate you being here, Goddess of Grain.
Well, thanks for having me. I always enjoy the conversation. And yeah, if anyone needs anything at all, don't hesitate to reach out. I'm an open book and will help in any way I can.
Okay. Are you trading this stuff, Angie, or for yourself at all, or?
No, I trade the cash side. I try to keep myself as unbiased
neutral
as possible, right?
Yeah.
Like the last thing I want to do is preach my position to my growers. And so I trade cash grain for my farmers. So I'm actively involved in the market, and the physical movement of the bushels, but I tend not to speculate or trade in my own accord, just simply because if I've done it in the past where I find myself rooting for one direction.
Book. Yeah, you talk
exactly.
You talk your book. I know it's hard to say, well, go ahead, hedge them here when you're bullish. So
yeah, exactly. So
I understand and appreciate your time. Hope 2022 is a great year for you and your team, and appreciate your time, Angie, for being here.
Thank you so much for having me. Have a great day.
Okay, everyone, Angie Setzer, and you can follow her on Twitter at Goddess of Grain. So that's going to be a wrap. Hope everyone enjoyed listening to Angie and the team today. Good luck. You could join the team in 25 minutes on the Morning Edge. So if you're not able to, it's a good day to join, because we're going to have some great trading opportunities this year. Agriculture being one of them. Talk to you guys later. Remember, don't just count your pips, count your blessings. Adios.